Hey, welcome back, everybody. Welcome back. Ed Ponsi here, your FX educator here on behalf of FX Street once again. Just taking a peek at the S&P futures here. A nice little boost here in the pre-market. And we're on the verge of all-time highs once again after a short little pullback, short little dip, little opportunity to buy the dip for all my buy the dip friends out there. Right, once again, we're pressing toward all-time highs on the S&P 500. A very familiar place. You know what's interesting? I'll tell you what's interesting is this. This market, you could say, and you can argue that this market has not been going up since 2009, because technically speaking, there was a year where we were flat inside of this market. I think that year is right about here. All right, you can see it. Okay, but you know what's interesting? This is the tech bubble. You can see it start in the mid-90s, and it ends in 2000, and we have a crash. Then we have the real estate bubble and the stock market crash of 2008. Now, I don't know how many of you were trading 9 years ago when the stock market crashed in 2008, right? But this caused so much pain and so much, so many people lost money here when the stock market crashed in 2008. Look at where we are now. Look where we are right now. And think of how badly people were hurt in 2008 when the market crashed here. And then look at where we are now. And consider what could happen. And think about that for a moment. And ask yourself, am I protected? Do I have a plan? Do I have the ability to hedge, to protect myself if this falls? Do I have a plan to make money? Do I have a plan to not lose money? Right? Because this was the crash of 2008, and this is where we are right now. We're much higher today than we were back then. And that's something that you cannot forget, right? And people get very complacent with this market. They get very complacent. They think, oh, we're just going to go up forever. And that you realize that never happens, right? That at some point, something will happen and take us the other direction. Now, what's the scenario that takes us the other direction? I think it goes something like this. Interest rates are creeping up. And if they continue to creep up, bonds and CDs begin to look attractive because they have no risk. And if they begin to yield a little bit more, the fact that they have no risk begins to look pretty good, right? That one aspect of it begins to look good. So money begins to flow out of stocks and into bonds and CDs, and that begins to bring this stock market off its highs. And the more that happens, that could have a cascade effect. As we see the market come off its highs, more people say, gosh, I'm nervous, the market's coming off of its highs. Let's put money into some of these CDs and bonds, which now yield more than they have in years, and they have no risk. More money flows into bonds and CDs, and the market comes more off its highs. And it's like a cascade effect. It's like a snowball rolling down a mountain, right? It builds on itself. That's how I see this eventually ending. Eventually, interest rates go up enough that fixed income becomes an alternative to the stock market again. It always used to be an alternative to the stock market. And I see it becoming one again in the future. That's a pretty amazing chart if you think about it. Stock bubble crashes here. Real estate bubble crashes here. What bubble is this? This is the QE bubble. And if we fall from here, we're falling from a very high height. Okay, let's move on from this. All right. Let's talk about let's talk for a minute about Swiss and Euro Swiss, which hasn't really been a big topic of discussion. I want to talk about it because we've seen an explosion of volatility here. Take a look at the ATR. I've been very quiet about Swiss franc because Swiss franc has been pretty dull for most of the year. But in recent weeks, it's become exciting again. So we're going to start paying more attention to it again. Here's Euro Swiss. I know this has a negative connotation for a lot of people, but they're not currently clinging to 120 or any such thing, and this never has recovered to 120 since that fateful drop that almost put FXCM out of business. And we've been under 120 ever since then, and it's fighting its way back. Currently at just above 115. This is definitely an uptrend, but it's not something where you could rely on a moving average or anything of that nature. This is an uptrend, and now I would be using shorter time frames. Now I'd be using oversold readings to try to get in. Now I would be using shorter term support and resistance. Let's go to the RSI and the shorter time frames. Pull up RSI and go to a 1 hour chart. And you can see buy signals are few and far between, but there's one right there. This is exactly what I'm talking about. All right, oversold on the hourly presents a great opportunity in these type of situations because not every situation lends itself very neatly to let's buy when this thing hits the 10-day moving average. Unfortunately, that's just not the case. I wish it were, but it just doesn't work that way. This is much more lends itself to the situation of, hey, let's go long when the 60-minute RSI gives me an oversold reading. This is a perfect example right here. RSI dips below 30, and as it comes back above 30, that's creating a buy signal right in here. Boom, it takes off. And what a nice move. What a nice move since then. Now, these overbought signals, we're ignoring them. Why? Because the longer time frame, the daily, is telling us that we're in an uptrend. So we expect overbought signals, and those do not trouble us. Those are not exit signals, by the way. You hear some traders try to use those as exits. They are terrible exit signals. Anytime, any RSI signal that goes against the trend, it just doesn't make a very good signal for anything. It should just be ignored. That's your best bet. Just ignore it. Okay, there's a perfect example of how to use this. You buy that dip where RSI is oversold, then you're buying in this area. and your stop goes under the low point of that area. So if it makes a lower low, then you're out of the trade, but it's a small loss. So you're not going to take a big loss here. But you could get a potential big win. And that's the name of the game always, right? Is that we never take a big loss, but we could get a big win. Isn't that always what we're aiming for? So Euro Swiss right there, there it is in a nutshell. Let's go daily on dollar Swiss. And let's get rid of RSI first here. It looks to be trending higher. I am going to take a look at the exponential moving average here. And it sure does look like dollar Swiss is found buying on the 10-day exponential moving average. Look at that. You know, it's funny how this type of strategy, you can go through long stretches where you don't see any type of activity on the 10-day moving average, and then suddenly, boom, it's everywhere you look. Right now, it's everywhere you look. Now, again, you got to be really careful because it's almost every USD pair at the moment. Not all of them, but you know, at least 4 or 5 USD pairs have this type of activity occurring. So we really don't want to take every opportunity. But look at this: 1, 2, 3, 4. Today didn't touch it. The moving average is 97.47. The current price 97.71. So we're off by about 24 pips. The low was 97.55, so it did come within 10 pips of that moving average. So it came pretty close, but no entry occurred. What's the ATR on this one would be a very good question. ATR here, look how the ATR has been dropping. It's only 62 pips. That means my stop is going to be half of the ATR. My stop is going to be 31 pips. So the purchase occurs right on the moving average. The stop goes 31 pips under the moving average. And then we will trail the stop underneath the moving average. As the price moves, the stop trails along behind. Okay? And but the stop never, you know, if you're long, the stop never goes down. It only comes up. And on those trades where we're short, the stop never goes up. It can only be moved down. If we come to a situation where, where we can't raise the stop, then we just leave it where it is. So in this case, the entry 97.47, that's only good for today up until 5 p.m. At 5 p.m., a new candle forms that will cause the moving average to jump up, and that means a new entry point. But for today, the entry point is 97.47. The stop is 31 pips below that. So that's 97. We said 97.47 for the entry, so 97.16 for the stop. And it's almost an embarrassment of riches here that we have so many opportunities to trade this strategy. So we're seeing it pretty much everywhere we look. The only pairs where I don't see it happening right now for USD, I don't see it happening on Euro USD. I don't see it happening on Pound USD. And we said on yen, it's kind of happening on yen, but look how it's flattening out. When you see that moving average flattening out, that's a warning sign. Today it's coming through. Also, that trend is within a support and resistance area. So the support resistance takes place over a longer period of time. So that to me means the support resistance supersedes the trend. I give more weight to the thing that happens over the longer period of time, because more time, and in this case, more time and more money went into the creation of the support and resistance level. And as opposed to the trend, which only, the support and resistance levels occurred starting in, really back here, starting in May. The trend starts in September. So I take the support and resistance, had more time, more money, more thought went into that, so I give it more. I give it more of my attention. It supersedes. Look at the plunge in volatility here on yen. You can see the candles getting tiny, and it has lost direction. Direction has turned sideways. It's just drifting. But volatility has plunged from 110 pips per day down to 73. Not sure what to make of that, but I'm not touching this as far as a trade is concerned. If it gets above 114 here into this resistance area, then we could talk about how we're going to trade this and maybe sell it short. But I'm not interested in playing this trend. Besides, I have New Zealand US dollar, Aussie US dollar, and dollar Canada, and dollar Swiss to play the trend on the 10-day moving average. So what do I need this for? I don't need it. Excuse me for 1 second, and then Carlos, I'm going to come back and get your question. By the way, congratulations on a great game for your Yankees the other night. Looks like the Yankees have a very good chance to advance now. Hold on one moment, please. Okay. Ed, can we look for shorts around 118.90, 1900s Euro USD? I think Euro might test. First of all, let's go back to Euro USD. There is, I call it 120.50 is the high end of resistance. But could you look for? And by the way, look at the volatility's dropping over there too. So the volatility's starting to drop everywhere. It looks like, not everywhere, but a lot of places. I think you have to get through 118.50 first. Is the key. Is going to be important on Euro. This line right here could be kind of a big deal because support, and then it breaks. So it could act as resistance at least for a little while. So can we look for shorts around 119 or so? Yeah, I mean, we could, but I'd rather look higher. Like look up here and look at this great shooting star up here. You know, I'd once we break resistance, I think you could run a little bit. We've got a really great shooting star up here. That's around 119.50, right? And then you've got another one around 120. So I'm thinking a little bit higher to sell short. Like a lot of, I'm seeing a lot of reversals, some dramatic reversals, but they're a little bit higher. Carlos is thinking, I still think Euro might test 115 and 114.20, where I may look for a long position. I'm kind of regretting that I didn't go long because I identified this area as wick, a lot of wicks, and had this one as um, a hammer. But at the same time, we had the Brexit speech by May, and we had so many different issues right now between the euro and the British pound. And there's so many good opportunities. There's so many good trading opportunities elsewhere. I guess I don't really regret it, but I'm a little bit kicking myself that I didn't buy this because I didn't identify this. As far as buying it lower, let me go to the weekly. Obviously, you're going to have to break support first. And that's going to be the tricky part. Support being 116.80, right? These wicks, and now these wicks over here on the weekly. So 114.80, if you're thinking of buying it in this area, first you got to get through 116.80. But assuming that you do, then 114.20, I kind of see what you're looking at. You're looking at this as a support area in here, and I think you could be right. I think that there could be, this was an area here that could end up acting as support in that general area. So, yeah, that could be tested. That could be a good place to look for a long. I like the 115.50. I'm not feeling it as much. That's right around here. But the 114.20 area, I'm definitely feeling that. Let me go to the daily. I see what you're saying about 115.50 as well. I see what you're looking at. Yeah, 115.50 maybe on the daily, 114.20 on the weekly. I see those as areas where you could find some support. Yes, absolutely. I do see what you're looking at. But if it does, again, it might never get there. But I think the way I always look at it is this, I know what I'm going to do if it gets there. I just have no idea if it's going to get there, right? I was looking at a gap down around 119.30 and the impulsive selling, but I see your take on resistance, especially on the monthly chart, 114.20. Yeah, I did not even look at the monthly. That's where 1 month ends and another month begins right here. So that could also have an impact. Interesting. I was looking at the gap down at 119.30 and the impulsive selling, but I see your take on resistance. Yeah, I mean, it it might work. Who knows? I mean, I just shied away from it because of all the drama out there, and because there's so many good trending things right now, right? And so I shied away a little bit because there's so much drama in Europe, and the negotiations are a little bit harder to follow. Sometimes I wish I was in the UK, like some of our friends out there. I think they have an easier time following this because the U.S. media, you really got to dig here in the U.S. sometimes to find the information. We're just not as tuned in to what's going on out there, and I feel uninformed sometimes about what's happening in the UK with Brexit and the negotiations, and I just don't like that feeling, like I want to know if there's a big speech coming, or because it means volatility. I just feel like we're a step behind out here. There's the opening bell, ladies and gentlemen. Should be interesting today. Will we hit? We had 6 consecutive all-time highs on the S&P 500 before we had a really bad jobs number, and of course the really bad jobs number might not be really bad. It could just be skewed. Richard says difficult for UK folk to make any sense. Yeah, I suppose maybe it might not make that much difference, but in the U.S. we just don't hear about it because U.S. News is very centric on the issues they want you to hear about. And they've decided that Brexit's not, that's not what they want you to hear about over here. They want you to focus on other independence. They don't want you to focus on Brexit. So Richard says, I have the Toyota plant and Rolls-Royce next to me. Interesting. Do they ever race? That would be like I could imagine during lunchtime, Just kidding. Anyway, that I'm sure that's a huge deal, right? Because Catalan, the Brexit issue could, you could lose that plant, right? They could pull Rolls-Royce particularly could pull that plant out of Britain, could pull that plant to the out of the UK, and also Toyota, right? So it's a tremendously big deal. That would mean a lot of jobs to your town. So I could see why that would be a tremendously important issue, right? And so you think of all the people who own shops, right? And they don't want to see those jobs go. And so yeah, I can see there's two sides to that issue. I can almost see that. I mean, Rolls-Royce, I think would be. I'd be more worried about Rolls-Royce than I would be about Toyota. Although I have no personal knowledge, obviously, but if Britain's independent, can't Britain then strike an independent deal and say, look, we want you to stay, so we're gonna give you a special rate. I would imagine most of the components come from the EU. Right, it's very complex, right? It's not that simple. It's never that simple, is it? It's never that simple. And this would cause a huge problem. You see, it's just not that simple. The Brexit issue is not that simple, folks. This is what we learned. And this is why it's great to have somebody from the UK in the room explaining this little issue, right? It's not a little issue at all, but the little intricacies of that issue, right? Thank you, Richard. That's terrific. That's good to know. And just imagine that times a million, right? You've got, this is being repeated all throughout, right? And suddenly what seems like a simple issue is not so simple, right? It's not that simple at all. Okay, gang. All right, and good luck to you, your team there, Carlos. I think it looked pretty bad for the Yankees there, and then they bounced back, and it looked like everybody was talking. Everybody on my feed was saying Girardi should be fired, but I think if they pull this out, I think he's going to save his job. So, all right, okay, everyone. Thanks for listening. I'm going to go work on, I'm going to go get some hot tea and lemon and try to work on this cold some more. And I'll see you on Thursday. Oh, big thing. One thing I got to remind you. Tomorrow, FOMC minutes. That's the big deal for tomorrow on your FX Street calendar. And on that note, I'll say thank you for listening. This is Ed Ponsi, your FX educator. I'll talk to you again tomorrow. Everybody have a fantastic day. Take care.